Now, as you can see, over a 220-point credit score increase. Now, the other day, we dropped a video showing you guys real-world receipts and proof and evidence of clients that were able to get mortgages deleted, auto loans deleted, but keep the accounts. So hide the debt completely from the credit report. And in today's video, I'm going to provide more receipts and testimonies. When I put the video out the other day, I had some naysayers saying it's cap. So as you can see right here, we're going to be logging into my Equifax. And again, shout out to our clients for allowing us to show you guys what's possible, because I think a lot of people don't really believe it's possible. All right. So as you can see right now, we're logged into my Equifax, and right down here, you guys see this. Remember the last video I put out, we were showing Experian. This time around, we're logged into Equifax, right? So let me just scroll up. And as you can see right here, a 220-point increase since August 5th, 2024. Does this ring a bell, right? So in the last video we showed you, we saw that huge increase. Now, what did this coincide with? This coincided with getting a delinquent mortgage deleted off the credit report. So right now they're at a 696 on Equifax. So if you subtract 220, that means they were at a 476. 220-point credit score increase. Now let's actually look at their credit report to see exactly what's going on. All right. Now, as you can see, this latest report is as of September 9th. I've blurred out some of this stuff. We were able to essentially hide all of the negative accounts on their credit report. So right now, all they have reporting is one low limit credit card. And that's why we're going to build up their credit profile. But as you can see, just with one account reporting, they're at a 696. So this is giving them a clean slate. There's no mortgages, right? So when you look at this category right here, no mortgage, no installment. All there is a credit card that was in good standing. So we left that alone. We did not touch that. But let's for a second go back to an earlier report. So as you can see right here, let's go back to the August 5th report. Now, before we go, I just wanted to show you guys again. All right. This is as of right now. There's no mortgage debt. There's no other installment debt. And there's just one positive revolving account. All right. So when we go to the drop down menu, we're going to select August 5th. All right. So as y'all can see, August 5th. Now let's scroll down. August 5th report, you had a mortgage with a balance of $225,000, right? So that matches up with the previous video where we were showing Experian. So what some people were saying, oh, that's cap. What about the other credit reporting agencies, right? I could show you TransUnion as well, but I wanted to give you guys another example. So as you can see, just looking from the September 9th report, going back to the August 5th report, which was about a month before, there was a $225,000 mortgage. So this is now reducing their DTI because they no longer have over $250,000 or close to $250,000 in debt on their credit report, right? So again, a $225,000 mortgage. And as you can see, there were some other revolving accounts that were delinquent that we were able to get removed. So let's go into the exact details about these accounts. And right here, when you see accounts with negative information, 7. All right. And again, this is on August 5th. Now let's look at the mortgage account. Let's just click here. All right. And let's view details. All right. So when we look at the details, again, a $225,000 balance. And right here it says account status not more than 4 payments past due. So let's just look at the payment history, right? Now, as you can see from the payment history, this mortgage had, let's say 1, 2, 3, 4, 5, 6, 7 late payments, right? As of April 2024. All right, April 2024, and then May and June, they became current, right? So just because you become current does not mean the account is not derogatory. It still has negative information. And if you don't do anything about this, these late payments are going to stay on your report for over 7 years. So could you imagine waiting until 2031 to have this account show positive, right? Without doing anything. You basically have to wait until the statute of limitation expires for those late payments. Now, again, recent late payments. So there were 4 late payments in 2024, and there were 3 late payments in 2023. Now, before we dive a little bit deeper, I wanted to address a comment in the last video, right? So let's pull this comment up real quick. Now, again, this is no shade to this individual, But let's just read what they said, okay? Wiping his mortgage off because of a few late payments, that's horrible, my opinion. Much better to negotiate reversing the late payments. For everyone reading, bad debt is not what you want, yet good debt is mandatory. You want loans, financing best to attain. Lenders and creditors will always see good debt. You can't get to 800 without 4 greats. So the 4 greats is credit cards, autos, installment loans, and mortgages. He needed that mortgage to get approved for next level sector of getting loans. Now, this is absolutely incorrect for several reasons. Now, let's go back to the credit report. All right. So if you have 7 late payments on your credit report, it's impossible for you to get 100% on-time payments, which on-time payment percentage is the biggest component of your credit score. So there's no way that you're going to be able to maximize your credit score with late payments. And mind you, this client's credit scores were in the 400s all across the board. So there's nothing that you can salvage from having this many late payments or any late payments reporting on a credit account. It doesn't matter how much history. Once you have late payments, all that previous history does not matter because you're automatically going to go into a high risk because you have late payments. Even if a credit account becomes current, the fact that it has negative information on it still makes it a derogatory account. It doesn't matter if it's currently on time. You have negative marks. Therefore, that is a delinquent account. If you're applying for credit accounts with late payments on it, especially 7 late payments on it, you're not getting approved anywhere. You're better off starting off fresh, getting a clean slate. There's this huge misconception that, oh, because the account is now on time, but I had late payments previously, that it's all good. I can still go out and banks are going to look at you as credit worthy. That's completely false and incorrect. And I could personally attest to this as it relates to student loans. I've told this story plenty of times on the channel, how when I graduated from school, I didn't immediately start paying my student loans because, again, that was the last thing I was thinking about, student loans, right after I graduated. But that actually bit me later down the road because those negative marks stayed on my credit report for years. So for the longest time in most of my 20s, I was classified as high risk because I had negative payments on my student loans. Now, even after I paid my student loans off, I still was unable to get approved for high limits because even closed accounts with negative information will still bring down your FICO score. So I was still unable to get high limit credit because I had negative information on my credit profile. Now, you might think, okay, 97, 96, 95% on-time payments, that's good, right? In the normal sense, right? If you scored 95, 96, 97 on the test, that's an A. But when it comes to your credit, the only thing that matters is 100% on-time payments, not even 99% on-time payments. That's still considered derogatory. And most creditors and data furnishers are going to be hard pressed to just turn these to on-time payments, right? You can't control whether or not the data furnisher or their lender is going to change the payment status. But what you can control is that entire account reporting on your credit overall. So it's much easier to get this account removed than hoping that you're going to submit a goodwill letter and they're just going to change it to on time. All right. So going back to the revolving accounts, right? So one of the things that a lot of people are dealing with right now is the fact that they have high utilization. So this client had a credit card with 112% utilization, right? Even though there's no lates, 112% utilization. So that's going to drag your credit score. Now, another thing that we can do is we can hide this credit account, right? So it usually works better with secure types of accounts. So mortgages, auto loans, even student loans, which are not secured, and even personal loans, right? But with credit cards, one of the challenges, I guess one of the risks I'll just lay out is that the credit card issuer can basically terminate the account, right? Now, when it comes to like auto loans and mortgages, the creditor is not going to close the account and come repossess your house or repossess your car. Either way, if you have credit accounts, whether that's an auto loan, student loans, mortgages with negative information or high utilization, we can get that hidden so that you don't have such a high credit utilization and a high DTI that's preventing you from being able to get access to financing. Another thing you have to keep in mind is that right now consumer debt is at record levels due to a couple of things. So you have inflation. So if people are paying more for items and then revolving those balances, then naturally those balances are going to report higher than normal. And we all know when you have high utilization, you're not going to get approved for any credit products. Now, I realize that right now, a lot of consumers are dealing with record levels of debt and people are essentially living off credit cards. So that puts you in a tight situation because you're not able to get access to any additional funding. I'm glad to say that we have a new method that's able to hide accounts. So it doesn't matter if it's a negative account or a positive account. So obviously any type of negative accounts, you're going to want to have those removed from your credit report. Now, when it comes to positive accounts, the considerations would be, are you even able to pay down the debt? Because if not, one of the things that you can consider is just having that account removed. Now, I'm not saying that you don't have to repay the debt, but what I'm saying is that you could have the account removed or hidden from your credit report so that it doesn't impact you as far as getting additional credit. And let's say you do decide to pay down your high utilization credit accounts. You can continue to do that at your own pace, but at least it's not hindering you from doing other things with your credit. And I think overall, this is where we've seen a ton of growth. Now, a couple updates. The other day we dropped a video. I wasn't expecting to get 2,000 people sign up over the past 2 days. So literally our Calendly and our Zoom essentially crashed. So what we're going to do, we're working on the back end to get a landing page set up. So anyone who is interested in getting these services done on your credit profile, we'll have a landing page where you can get onboarded. We've pinned a link in the description as well as in the comment section. So if you've already filled this form out, we're going to reach out to you, send you a text and an email once that landing page becomes live. So we have our developer working on it, making sure that it runs smoothly before we roll it out to everyone. Now, just to reiterate, if there's anyone out here who needs negative items removed from their credit report or even open accounts on their credit report, we can get those accounts removed or hidden from your credit report. And the great thing about it, let's say with a mortgage or an auto loan, that debt's going to be hidden from your credit report, but you get to keep using the account. So you get to keep the home and keep driving the car. Now, one thing I want to just emphasize, just because it's not showing on your credit report does not mean that you don't have to pay it, because that's not going to stop the repo man from coming after you. That's all for today's video. Until next time, take it easy and we'll talk to you soon. Peace.